Investing in the stock market can be a time-consuming process. Today, as part of a fundamental analysis of Tesla stock, we will look at some data gleaned from Jim Cramer, so keep an eye out. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now let's get to the video. Jay Powell, the chairman of the Federal Reserve, has referenced the Fed's bond buying program, which he had previously stated will be phased out when the pandemic decreases, but he appears to have changed his mind recently. Powell's announcement that bond buying would halt sooner than expected was enough to send investors to a panic. The announcement was obvious, but the timing could not have been worse, given investor concerns about the Omicron type, according to Cramer. What does this mean for a typical investor in index funds? Well, not much, remarked Cramer. Individuals are buying stocks for the long run. Therefore, today's short-term slump is merely an opportunity to invest. He was cautious though, and advised viewers to hold off until the first confirmed incidence of Omicron in the United States. That occurrence will almost certainly prompt more selling, hopefully signaling a short-term bottom. Meanwhile, technology equities such as Amazon, Microsoft, and Tesla can still be purchased. They can also invest in dividend-paying stocks, which will perform well in this environment. In the end, it is indeed better that the Fed's made his ideas public. Markets can finally begin to move forward now that the damage has been done. There are 4 categories of sellers, according to Cramer. In terms of stocks trading, the first group is terrified of inflation and will use any means at their disposal to scare you out of equities. The second group expected the Fed to tighten, but not at such a rapid pace. The third group is simply attempting to lock into their gains in order to re-enter at a lower price. The fourth group, on the other hand, is concerned about an Omicron slowdown. The issue is that none of these groups can possibly be correct. If the economy slows, the Fed will be less likely to tighten, and if the Fed does tighten, things must not be as bad as we imagine. That suggests that buyers will return to the market shortly, which is why it makes sense to take advantage of the market's weakness and buy some stocks. First, let's look at Amazon. Most people think of Amazon as an e-commerce company, and with good reason. It has become the online marketplace of choice for millions of people all over the world. However, Amazon is also involved in 2 other rapidly growing industries, both of which have the potential to fuel significant growth in the coming decade. E-commerce, cloud computing, and digital advertising are 3 high-growth markets in which the corporation competes. Presently, the market cap is $1.62 trillion, and it is expected to rise in the following years. Amazon has a 41% market share in the US e-commerce business. To put its competitive advantage into perspective, Walmart is the next closest competitor with a market share of 6.6%. As a result, it is several times more expensive than the next closest competition. Amazon has a 32% global market share in cloud computing, with Microsoft coming in second with 21%. The operation margins on AWS, the cloud computing side of the business, was around 29% in the most recent quarter, compared to roughly 4% in its North American e-commerce business and 1% in its foreign e-commerce business. This is the company's cash flow growth engine. If you own Amazon stock, you should be concerned about the fact that the company has earned negative free cash flow for the past 12 months. In fact, cash from operations fell by 1.2%. Even now, during the most recent quarter, Amazon CEO Andy Jassy stated that the company's fulfillment network had nearly doubled in size since the outbreak began. We believe that this enables them to provide a superior delivery experience to their customers while also bolstering their competitive advantage. Microsoft, on the other hand, is set to release its second quarter fiscal 2022 earnings on January 25th. Except for gadgets, practically all segments have showed strong increase in the first quarter of fiscal year 2022 and full year fiscal 2021 statistics. The main growth engine is server products and cloud services, which include Microsoft Azure and several other items, and investors will want to see ongoing progress in this area. Microsoft profit margins have been increasing recently, which is great news for investors. The EBITDA margin is above 50%, which is really impressive. Much of this can be attributable to the intelligent cloud's higher operating income. Despite considerable capital returns to shareholders through buybacks and dividends, Microsoft's balance sheet remains strong. In the previous report, the corporation had over $130 billion in cash and short-term assets on hand, compared to $50 billion in long-term debt. Over 5% of the current market capitalization is made up of cash and short-term investments. Overall, the enterprise value is $2.24 trillion, which is around $50 billion less than the market cap. When the second quarter profits are disclosed, shareholders should expect a similar capital structure. Microsoft's recent drop from all-time highs could be a good entry point or an opportunity to buy more stock. For long-term investors, incremental purchasing may be the best option, given the current value and market conditions. So, how do you feel about Tesla stock? Elon Musk is scheduled to participate in the earnings call once more. Now, is this a good thing? Well, Tesla is set to release fourth quarter earnings, with investors anticipating a return of CEO Elon Musk to the after results call, as well as potentially concerning news about the Cybertruck and supply chain fiascos. Last year, Musk informed Wall Street that he was unlikely to appear on future Tesla earnings calls unless he had something meaningful to discuss. He was also absent from the EV maker's third quarter conference call in October 2021, and according to sources, the Cybertruck, an unusually designed electric pickup truck that was launched in 2019, has been postponed. Tesla's first foray into an auto body style that the US residents have favored for decades was expected to begin production this year and reach volume production by early 2023, putting in several years and months behind schedule and several months behind electric pickup trucks from GM, Ford, and other OEMs, as well as newcomers like Rivian. So how does this affect Tesla? Should investors anticipate some good news? Well, Tesla stunned Wall Street earlier this month with record fourth quarter sales up over 90% from the same period from the previous year. All signs point to another excellent quarter for Tesla, which has a long history of beating earning estimates. Given the high fixed cost of auto manufacturing, Tesla's record quarterly output and sales provide tremendous bottom line leverage. Tesla's 2022 guidance, storylines for production ramp-ups at new factories in Texas and Germany, particularly in the face of semiconductor scarcities and supply chain issues, and next stages in its long-term growth plan to increase annual output by a factor of 40 between 2020 and 2030 are all key focus points for earnings. Emmanuel Rosner of the Deutsche Bank expects a positive update from Tesla on growth and margin potential for 2022, as well as the cadence of new product and technology even without that direct guidance. Other potential highlights for the quarter include details about Tesla's alternative energy business, the state of its in-house battery production and sales in China, as well as the timing of the production ramp-up for its new plants in the Austin, Texas area and in Germany. Alexander Potter, a Piper Sandler analyst, feels that with the two new facilities coming online, Tesla should theoretically be able to exceed production projections. However, he claims that China's zero-COVID policy could jeopardize businesses in Shanghai, while Tesla kicked off 2022 on the right foot by revealing that it delivered more cars than anticipated in 2021. So, there is no reason why it shouldn't have another successful year. Due to its cutting-edge technology and consumer loyalty, Tesla is the most powerful player in this business, and as a result, it will inevitably benefit from the industry's expansion. And with that, today's video comes to a close. To express your love and support for the video, don't forget to hit the like button, subscribe to the channel, and hit the notification bell to be the first to know when a new video is posted. Now, thank you for taking the time to watch, and we hope you enjoyed itself. We look forward to seeing you again soon.